Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame bullish scenario, where from the high we are looking for a three-wave structure to the downside, after which we want to see another impulsive structure to the upside, where price is going to hit this 0.618 taken from this high to this low. The reason in the bullish scenario you want to see price hitting this is to invalidate a potential wave 4 and then a 1, 2, 3, 4 not allowed and then a wave 5. So that is the reason why. Now the invalidation for this scenario is also price taking this low. So we have two invalidations on the chart. In this scenario, wave B retraced to the 0.382 Fibonacci taken from the high to the low of A, which is a common target for a wave B, little less common for a wave 2, and wave C went to the 1.618, which is a target for a wave C. In this scenario, we are then looking for either an impulse to the upside, a leading diagonal for then a wave 1, 2 and continuation, or multiple 1-2s before a push to the upside. And the current bullish scenario I have here locally would be this one over here. From the low, we then have a wave 1 to the upside, flat in a wave W, zigzag in a wave X, and another zigzag in wave Y. The problem in this scenario, however, is time. This wave 2 here is 27 times longer than this wave 1, which is very rare for a wave 2, fits better with a potential wave B. Also, price retraced quite deep, almost hitting the 886. The 886 being a rare target for a wave 2, but common for a B or an X as well. We didn't hit it, but we did get very, very close, of course. And after this scenario, in the bullish scenario, we want to see a 1, 2, and then eventually a 3 to the upside to have a sub-degree 5-wave count of this blue wave 3. 1, 2, 3, 4, 5, ending blue 3, of course hitting that 0.618 at 44.8k. In the bearish scenario, we are looking for a continuation to the downside, where very likely price is going to take this low as well at 40.6k, plus the ones that we have here as well at 40.5 and 40.1k. In this scenario, we're looking for an impulse to the downside, 1, 2, 3, sideways 4, and then a wave 5. Common target here for your wave 4 is between the 0.236 and the 0.5. I only have the 3 at 2 and the 0.5 on my chart now, as these are the two remaining ones above price, between 43.2k and 43.8k, with this particular 618 at 44.4k. The reason is that these fibs are taken from the high of 2 to the low of 3. The safer invalidation for this bearish scenario is this 618 pulled from the higher high over here instead of this one to the low. So that is the reason why I would specifically look for this 44.8k 618. However, this already very much lowers the probabilities for an impulse to the downside if price would move up and hit this level. Time-wise, price is still doing very good for a wave 4 compared to a wave 2 over here. This range to the downside is very much corrective on the lower time frames, which is the reason I put wave 2 over here. And if you take a fib time from the low of 1 to the end of wave 2 and put it on the low of wave 3 to compare the time of 2 with the time of 4, having a wave 4 that is 3 times or 4 times longer than a wave 2 is absolutely normal, but we don't really like to see a wave 4 going to the 5 or 6 fib time, with the 5 fib time sitting on the 16th of January 2024. Now in this scenario, we then expect price to move to the downside. Besides the lows mentioned over here, with the lowest low sitting at 40.1k, we also have support with the golden box here at 38.6 to 39k, and then some more support between 37.7k and 36.3k. Above price, we have some resistance, which is the blue box that I have on my chart over here between 42.8k and 42.9k. And above this level, we also still have this daily naked point of control here at 43.5. If we then have a look at the scenarios that would lead to this bearish scenario and a wave 5 to the downside, then we have to look at this structure to the upside as an ABC. So now we have a 5 wave A, WXY in B, and we're then looking for a wave C to the upside. Most common target for C is between 43.2k and 43.6k, which also includes this daily naked point of control. However, it does mean that price then has to move above this resistance area over here. So you have to flip this right, to get to the daily naked point of control and then move to the downside. And in this particular scenario, preferably, of course, we don't want to go too high and hit that 618 that I mentioned earlier at 44.4k and then 44.8k. Because time is so long in this sideways structure, an ABC here fits better than a wave 2 because of the 27 time longer range here compared to this wave A. Another bearish scenario here, which would be more bearish, is that we have a triangle in an A, B, C, D, and then a wave E, after which we have an impulse to the downside. Now in this scenario, wave A of the triangle is a bit awkward because in a triangle, all of the waves have to be zigzag structures, which also means that all of the waves have to respect the zigzag rules. If this is a wave A, then we need a zigzag over here to the upside in a 5-3-5. Now, if we look at the extension, trend-based fib extension, taken from the low to the high to the low, then you can see that this wave C of A did not even hit the 0.618, which is already a rare target for a wave C. The most common target is the 1 to the 1.236, which is up here. So the fact that this one is so short lowers the probabilities. This is an ABC, which kind of lowers the probabilities of the whole scenario. Now, if we look at this move to the downside, and this is the end of your E, which, by the way, same problem here. This needs to be a 3-wave structure and then an ABC, right? Ending E over here. This wave C is very, very short compared to your wave A over here. However, after this E, then we are looking for a move to the downside, right? An impulse to the downside to start a bigger 1, 2, and then eventually a wave 3 in blue. If we zoom in to this one and this structure here, then you can see we have a long sideways wave 2 and a very, very short wave 4. Now, based on rule of alternation, that is a possibility. The only problem here for this wave 4 is the 618 that is touched, taken from the high of 2 to the low of wave 3, which would invalidate a wave 4. However, you can't put this wave 4 to the left over here, for example, and this wave 3 to the left because of the overlap. Then we have to think about diagonals. But I also can't put this wave 4 lower because this move to the upside is too high for a wave 4 as well, and we never got another range here that could arguably be a potential wave 4. Another thing we have to keep an eye on is the 886, because if you would be looking for a wave 1 and then a 2 to the downside, then the 886 is a rare target for 2, lowering the probabilities that the move to the upside is a wave 2. Increasing the probabilities, any move up is a B or a wave X, so any retracement down is a C or Y, increasing probabilities to take these highs at a given moment. If we look at these CVD divergences, then we have a bullish CVD divergences here, locally bearish CVD. These already played out, but we still have this bullish CVD where the target is this high over here. And if we then look at the probabilities of the different scenarios, then locally an A, B, and then a wave C to the upside has a higher probability compared to a wave 1, 2, and a wave 3 to the downside, which then would mean that short term the probabilities would be higher for some more upside. Of course, we have the resistance right above price here as well, but preferably wave C hits the common target area, which is over here between 43.2k and 43.5k, which includes that daily naked point of control at 43.5k. On the low time frame, when we zoom out and we are looking at this structure as a whole, then the probabilities are at the moment higher for a move to the downside, and that is because of the length of this structure compared to the move to the upside over here. Your wave 2 or your wave B is incredibly long compared to your wave 1 or your wave A, and this fits better with a potential ABC compared to a 1, 2, 3. Of course, invalidation for the bearish scenario would be hitting the 618, right? Now, if price would move then to the downside and takes this low, then we don't yet know if it's going to be a wave C to the downside, 1, 2, 3, 4, 5 in a bigger wave C, and then we're going to move back up towards the 50k area, or if this move is a wave A or a wave 1 for then a retracement to the upside in a wave 2 or a wave B for then impulsive continuation to the downside in a wave C or a wave 3. That is something that we will continue to observe, of course. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.